Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissRatings.com. Welcome back to the show, Sean.
Thanks for having me on.
Sean, you talk about an interesting phenomenon that you think is going to affect what's going on in the markets. What is it, and what's it going to do?
Well, it is what I call the Trump trampoline, and I believe President Trump trumps any fundamentals that might otherwise turn the market bearish. I mean, we've already seen President Trump push hard for a trade deal with China as a fresh catalyst for the market that will come sooner or later. But we also saw at the beginning of the year, or I should say the end of last year, we saw President Trump be a vocal critic of the interest rate hikes that the Fed was doing, and he put so much pressure on the Fed that in December the Fed changed course and became extremely dovish. More recently, we have Larry Kudlow, and he is President Trump's director of the National Economic Council. He called for an immediate he called for an immediate 50 basis point rate cut. And when he talked about that, he said, I am echoing the president's view. He's not been bashful about that view. He would also like the Fed to cease shrinking its balance sheet, unquote. And so this is even though Kudlow says, by the way, that the economy is fundamentally healthy, he did say that the Eurozone is virtually in a recession and that China is very, very soft. This is the same China that just released a manufacturing purchasing managers index that was at a 6-month high. So what you have is a president who has tied the image of his success to what happens with the stock market. And so he will pull out all the stops to make sure the stock market goes high. When it pulls back, that is a buying opportunity because the White House will do whatever it needs to do in order to push stocks higher. So that's the thing I think many people don't get, and it is confusing the heck out of people because they look at things happening and say, well, stocks should go down. They look at the fact that earnings estimates for the S&P 500 keep falling and are now down about 7% for the first quarter year over year. And like they say, well, obviously stocks must go down. Not if the Fed, under pressure from the White House, is going to open up all the easy money taps and push the market higher. It's going to float higher on just an ocean of easy money. So I think that's one thing that people haven't really taken into account, but they should. And so that puts a bullish bias on the market, and so people should act accordingly.
Have we not seen record high buyback of stock levels over the last quarter?
Well, funny enough that you should mention that. I was just writing about that, as a matter of fact. Let me see if I have the stat here. S&P 500 companies repurchased $223 billion of their own shares in the fourth quarter. That's up 63% from a year earlier. And the reason they do this is because as they gobble up their own stock, it improves per share earnings. And so now we probably won't see that level going forward simply because a lot of that money was brought back under that big tax break they got. So, but we should still see that. And in fact, I believe that's one thing that is weighing on like U.S. interest rates and pushing up the prices of bonds is that many U.S. companies used to park money overseas. Now they're parking it in cash in the U.S., but in cash means they have to buy short-term treasuries and maybe even sometimes 10-year treasuries. And so that is, pushing up the price of bonds, pushing down the actual interest rate on those bonds. And so that is confusing the heck out of people, because people are looking at that and saying that's recessionary. When we see the price of those bonds go much higher, that shows that there's an anticipation that things are going to get worse. But maybe it's just that that's where the corporations are parking all this cash that they don't want to put to work. They just want to keep on hand, is they're just putting it into treasuries.
So the old inverted rate yield curve may not be the old-fashioned warning of recession.
I think in this case it may not be. Now, of course, we'll only see 2020 in the rearview mirror, and I could be wrong. But that's what I'm seeing right now, is that U.S. companies are just not keeping the money overseas that they used to, and instead they are bringing it home and they're sticking it in treasuries. And you can't really blame them. Who would want to keep money in Europe right now? I mean, because Larry Kudlow was right about that part, I mean, Europe is near recession. It's not looking good. And so, you might want to keep it closer to home, look for other opportunities here and stuff like that. And now this could change going forward, but that's the snapshot we have of things as they are now. Now, what does that mean for things like gold and like stuff like that? Gold had a terrible week, and if you look on a chart pattern, it is kind of hammering out a head and shoulders. Head and shoulders pattern could point the way to lower prices. That's absolutely true. However, if what Kudlow is doing is he's adding pressure on the Fed to cut rates, and it sure looks like that. And if the president puts more pressure on the Fed to cut rates, what do rate cuts generally lead to? They generally lead to higher gold prices. So this just might be a pullback before the next run-up in gold. I have positions in gold. We have taken some recent gold gains, but I'm quite happy to hold the rest because I don't really know what's going on in the gold market. That uncertainty is like one of the things really weighing on it now. There are other metals I like more right now, things like lithium and uranium and stuff like that, but I still think people shouldn't be that bearish on gold. It just might be one of those weird things about this weird market that is behaving the way it is right now.
We'll have more with Sean Brodrick right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Sean Brodrick. Sean, what's happening with crude oil? Is it getting stronger?
Crude oil, well, at least now, of course, there's many different prices of like crude oil, but the U.S. benchmark for crude oil is at its highest prices since November. It looks awesome. And the reason is because OPEC has basically been able to enforce its output cuts. The Russians are cheating like crazy on that, but it doesn't matter because of other problems within OPEC itself. Other countries that are having production problems, Venezuela would be the poster child for that. There really is some real price discipline, some real production discipline. And so that is pushing the price higher, makes the oil sheiks happy, but it also makes producers in North America happy. I can think of some small Canadian oil producers that are doing quite well lately because of this. And also in the Permian and stuff like that. This is great news for all those companies. I just recommended a new oil company to my subscribers today. We already own a bunch. They're doing well. I expect this next one will do well. I think there are some big trends in play. That includes, we have seen the global economy slow, but there's enough stuff happening around the world, especially in China, which is throwing money at problems like it's nobody's business. China's desperately trying to reignite its economy, and the latest numbers out of there show they might be having an effect. And so that kind of thing can actually gear up oil demand. So, it's a situation we have to watch, like day to day, but the big overall trend really seems to be more demand for oil globally, while at the same time there is production discipline from OPEC, and that's a 1-2 combination that points the way to even higher prices. It would not surprise me to see oil go back. This is the U.S. crude oil benchmark. You'll have to use whichever one you have locally, but it would not surprise me to see the U.S. crude oil benchmark go back to retest $75, which it hit back in October, and if that happens, you're going to see a lot of happy faces. Now, that would mean that oil's just in a big range. Will it break out of that range? That requires something extra, but we could get that something extra. We'll have to see how that works out.
Well, yeah, we always take a look. Venezuela, we hear they have a handful of Russian troops in there. Geopolitically, they may not be producing a lot of oil, but still, they're a major factor in the market.
Yeah, well, it's not just them, of course. It's also Libya, it's Nigeria. There are other places that are major oil producers that have problems. They happen to have unstable governments. At least some of them do. And then there's the whole thing is, will harsher sanctions on Iran be enforced? Now, they are mainly a natural gas exporter, but they also do export some oil. And so there's a lot going on in this market that could push prices around.
We'll have more with Sean Brodrick right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Brodrick. Sean, uranium still becoming more popular?
Well, actually, we've seen a compression in the price of uranium for the last couple months, but then, unlike Monday, it jumped 2%. That's, of course, the spot market. We could talk about the longer-term contract price. That's a whole different can of potatoes. That lift in the spot price for uranium really put a lift in some uranium stocks I follow. They're actually looking quite good. Now, we know that the spot price is really driven by purchases from Cameco, or at least in the past it has been. That doesn't mean that it will be going forward, but really what's been pushing it around was Cameco makes purchases, and so that sends the price higher, and then Cameco holds off for one reason or another, and that sends the price lower. What they had been doing the past couple months, they hadn't been making their purchases. That sent the price lower. That made everybody pessimistic. But now Cameco's in the market again. Now they're buying again. And so everyone's feeling good. What we do have coming eventually is a ruling on the Section 232 position that was filed by UR Energy and Energy Fuels. Those two companies, those are American producers, have filed a petition with the Commerce Department asking for protection from what they say are foreign companies and countries dumping uranium into the U.S. And so they wouldn't have to be a quota system, but some kind of protection in there to support U.S. production. Now, I know that Uranium Energy Corp., which is another developer, not a producer in the U.S., but it could be, and it has been in the past, actually had a booth at the CPAC conference in, I think it's in Washington, D.C. Anyway, it's a big meeting of the conservatives, and they hired a Trump-friendly PR representative as well. In other words, they're trying to make the case to President Trump himself. And we know once he gets an idea, he tends to run with it. So we'll have to see how that goes. I think we are seeing some bullishness related to Section 232 start to leak into the market as well. If that ruling comes out and it's favorable to U.S. producers, that will generally send the price of uranium higher because U.S. producers can't meet the demand from U.S. utilities. That's the funny thing. And so, what actually does that mean for the market? I don't know. Maybe there'll be a price support in there. Maybe there'll be something else. Cameco is generally known as a Canadian producer, and of course it is. But it does have U.S. properties. It can be a U.S. producer as well. And so, that could be a very interesting development for Cameco too. So you put those things together, it's an interesting space to watch. It's not a bad space with some money to work right now because everything got beaten down again. And I think you could do well, certainly over the next year.
Bitcoin has had a big jump. What's behind that?
You know, Bitcoin is the most, I don't know, it's the most psychological market I've ever seen in my life, right? I mean, it's really hard to say what drives it. Now, there was a rumor, and God knows what faith we want to put in rumors, that big move in Bitcoin itself, which sent the price surging over $4,700, was like one buyer really making a big play. So maybe that's happening, maybe not, I don't know. So we'll just have to see what's actually going on there. But it has put a good move under the crypto space itself. Many of the cryptos are moving quite higher. Could this be the beginning of like something new? Frankly, I don't know why Bitcoin goes up or down. I am not a Bitcoin expert. You should talk to maybe Tony Sagami or someone who likes to play that market. As wild and woolly as this market is, it's amazing that I've never invested in it. But I prefer to stick to things like silver and gold. I can understand those much easier.
Yeah, and you can actually hold on to them.
Yes, exactly. They are actually physical.
Sean, thank you so much for chatting with us.
Thanks. I had a great time.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. If you have any questions for Sean or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.